All right, well, welcome back. Today we have with us somebody who has lived this life and gone through the journey of being a teacher all the way to becoming the CEO of a publicly traded holding company. Dom, thanks for joining us. Bootstrapping Billions.
Yeah, thanks for having me. Looking forward to it.
So to tease it a little bit, kick it off the right way, hopefully catch the audience early. Can you give us a little bit of a sense of what it's been like in terms of a journey, going from being a teacher to now, being the CEO of a publicly traded on NASDAQ holding company? I think it's 12 companies, 50% year over year growth from 2024 to 2025, 50 plus team members. Amazing journey, an amazing story. What do you think the audience is going to get out of today?
Hopefully, some ideas on what they can do. I think not everybody has to do the path that I've done, but I think there's definitely lessons along the way, especially as, when you say it like that, from English teacher or from teacher to CEO of a public company, it's quite a jump. And it is, but it was a 13-year journey from when I started to where I am now. So obviously there were lots of things along the way. And so I think a lot of the lessons or insights I've picked up along the way, I hope will be very helpful for people.
What do you think are a couple of nuggets that folks will pull out of today's episode?
I think one hopefully is realizing that in most cases, particularly when it comes to things like trying to raise money or structure things in a certain way, like partnerships or whatever, there's lots of different ways of doing it. And it's really about just what you think works. So yeah, I'm sure we'll go into examples of that. And then maybe something else would be, it's really just a mindset thing. So how did I go from, I don't have a finance background, I don't have a software background, I can't really code. I can kind of read it a little bit.
You can prompt.
Yeah, I can prompt, yeah. But no, like the first websites I built were in WordPress. So the extent of my coding knowledge was when something broke, I could click the HTML tab and kind of understand it a little bit. But I've got to where I've got to really by just saying, well, let me figure that out and see if I can do that. And really, I'm not the type of person who sits around figuring stuff out either. I just ask people. And so I think basically anybody can go on a similar journey, maybe not the end result. Like, I don't think everybody wants to have a public company, but it's really about just thinking, okay, where am I trying to go? What am I trying to do? How might that work? And really just problem solving. And I think a lot of bootstrappers are good at problem solving. So I think it doesn't have to be as intimidating as it might be.
Yeah, it's like the grit and the grind and that investor mentality of kind of invest in yourself, just figure it out. You are your own first investor to a certain extent. 13-year journey, right? Everything starts somewhere, and it's definitely not overnight. Everyone looks at things and they think that it just happens. You're a living testament to that.
Yeah, and it mostly happens at the end. If something takes 10 years, you're not going to be halfway there after 5 years. You're probably going to be like 5% of the way there after 5 years. And then those final years, everything really accelerates. I definitely heard some quotes like that when I first started, and when I was sort of 1 or 2 years into my journey, lying awake at night, wondering if I'm ever going to actually succeed. And succeed for me at the time was like be able to quit my job and maybe earn a couple of grand a month online. I think it took me about 18 months to earn my first $1,000 online. So, but I kind of believed, or I'd heard someone else on a podcast who was 13 years into their journey. I knew, but if I keep going, maybe I'll get there. I desperately wanted to, but it was also very much hope as well. Like I didn't have any idea. Sometimes I look back and I'm like, oh, I did make it. Wow, how did that happen? So yeah, it's really about just trying to sort of take the next step and bank some wins, and then suddenly 10 years later, you're like, wow, how did I get here?
Can you take the audience back to that just get started mentality? I mean, so I'm beyond excited to have you on the pod. I've been following you and your content for a really long time, and there's a why behind that. For me, the why is the fact that Onfolio is it's a listed on NASDAQ, have to report things. And in such a world of, is that person full of shit, right? You almost have that stamp of validity behind it as well into the journey. So when you're listening to the content and you're taking it in, it's something to really pay attention to. Like I even feel that sometimes, right? I've been doing this for a fairly long time myself. I'm like, man, is this content that I'm putting out there, like, is it coming across the right way? And who are you paying attention to and what are you listening to? So for those reasons, that's why I'm very excited to have you on and introduce you to the audience, and hopefully they can pick a lot of the insights from your experience out of it. But in terms of the just get started mentality, like how did you get started? So were you sitting, you know, I know we talked about it, English teacher, but were you in the day job and then did you start kind of building something on the side, or
Yeah,
what was the onset into it? Like, how did you transition from one to the next? Because it is a pretty big leap, and I definitely want to get into how you went through the process of Onfolio. But how did you just get started?
it wasn't the first thing I tried either. The first success I had online was building WordPress websites and ranking them in Google and making money from affiliate marketing. But before that, I tried a bunch of different things. Like I tried selling stuff via an MLM. I tried learning how to be a stock trader. I tried lots of different things, and there was also a lot of like paralysis by analysis. Like I read 4 Hour Work Week, which inspired me, but I didn't really take much action on it. I was just taking notes, kind of like, well, maybe this could be my business idea or my muse, as they're called in the book, and like never really did anything. But then when I discovered internet marketing and I joined a community that teaches it, and because all I have to do was sit in front of a computer and basically write. That worked for me. So I was rubbish with WordPress. Like I couldn't build. It was very much just use themes, use out of the box tools. I couldn't really design anything, but I could write. And so, or I thought I could write. I'm sure if I go back to some of those earlier blog posts, they're awful, but I didn't mind writing. And so I started probably 3 or 4 different blogs within the first week or two. Like I'd be like, oh, I'm going to do this. And then, so I think my first affiliate website that I attempted to start was a quit smoking, like how to quit smoking, because I had just quit smoking. So it seemed relevant. And then as I learned more about keyword research and monetization and stuff, I was like, okay, this is way too competitive. And then another thing I did, I think, was I had quit smoking by reading a certain book. So I just thought, okay, I have to sell that book. I can't, like, I almost had to say everything else doesn't work. So this was 2012. So like e-cigarettes were not what they are now, and vaping wasn't really a thing. But I would be like, e-cigarettes don't work. Cold turkey doesn't work. You should buy this book. And then that was how I used to kind of do affiliate marketing. And then when I started my second website, which was about straight razors, like, the traditional cutthroat razors, it was kind of the same mindset. It was like I kind of felt like I just had to persuade people that this was the best thing. So I'd say straight razors are better because blah 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 blah. And then as I was maturing, or becoming more, I don't know, just a better marketer, I realized, well, no, actually, what I should say is straight razors are good if you want this, safety razors are good if you want that, wet razors are good if you want this, electric razors are good if you want that. Here's the best of each one, blah, blah, blah. And I'd research them and write about them, and it did a lot better once I started doing that.
What if we broke that down? What do you think? Like, because it's probably an opportunity for a lot of folks to learn. Is it from like going from a pitch to then more of a value creation, or what do you think is the why
Yeah.
behind it?
Um, I don't know. I don't know what prompted it, but I do remember I had a kind of aha moment where I was like, "Oh, wait a second! Like, it's okay to." Maybe I read someone else's blog and I was like, "Oh, that's how they've done it."
Right?
I don't
Probably.
remember, but the aha moment I had was like, "Oh, it's okay to recommend what you don't have to recommend one over the other." I don't even know how I interpreted how I thought that's what I had to do. I remember being like, "Wait a second, I don't have to do this," and so I think at the time I somehow ranked number one in Google for best straight razor. And so I started realizing, I ranked, so I started realizing, oh, I can provide a much more informative website if I take more of an approach of, yeah, this product, this type of razor is good for this situation. And if you are interested in this type of razor, this is the best one. This is like the cheapest one, kind of stuff that now is very ubiquitous affiliate content.
Hmm.
I certainly didn't pioneer it, but back when I started, it wasn't as common. So those of us who did do it, yeah, that like we would get a lot of success.
I
And
kind of want to
so
go deeper into this because I know that we're going to at some point connect it to GEO as well, and like this new age of search that we're going into. But do you think that happened, that transition happened because Google was telling you, like Google was ranking you higher by taking this content, so they were giving you the positive reinforcement of do it this way, and then because you got more traffic, you got more clicks, or were you looking at it and saying, oh, when I write this way, I get more revenue and more people are clicking? Like, was it the user or was it Google?
I think it was probably the user. I mean, this was like mid 2013, so I don't really remember, but I do remember that that was my realization. Definitely, it's true. I was like, oh, this page is getting a lot of traffic and no one's buying anything because they're going to the page where I'm saying, don't buy a safety razor, buy a cutthroat razor. I definitely remember making a distinct change to say, this is everything you need to know about safety razors, and these are the best ones, and go check them out on Amazon. And it was almost overnight. I started making, like, instead of like no sales, I made 2 or 3 sales a day. And then I started expanding my content, and I wrote a lot more informational content as well. I think again, for example, I think there was another article I had that was straight razor versus safety razor, and maybe that one was number 2 in Google or something, and or even
But
how
you
to
started to
use a
get the
cutthroat.
clicks, and the clicks started to convert,
Yeah, and
and
I
then
would,
that
well,
cash
the
started
way
to come in.
Google worked back then, people have started talking about this now because I think it's actually in part of the algorithm. But I kind of intuitively have seen over and over again that once you start ranking for 1 or 2 keywords, you'll rank for more because Google has data to work with.
Mm.
But I would have informational articles like how to use a cutthroat razor, and to me, I was like, well, that's a useless article, even though I'm getting traffic to it, because there's no like immediate obvious sell I can put in there. And as I was just reading more and learning more and like just being less of an idiot, I was like, oh, wait a minute, I can just say to people, hey, if you want to learn more about the best razor, buy this one. Or even how to use a cutthroat razor, I'd say, well, if you're a beginner, you should check out, I think it was like a 7-degree blade or a 7-inch blade. If you're more advanced, you should use 6 because it does a closer shave, but it's easier to cut yourself. Check out this article about the best ones, and it's really standard stuff that you see on the internet now. Uh,
Frictionless path
I
to value.
Yeah, and it's like really
Keep it
obvious,
simple.
but I didn't know what I was doing. I was like, I'm just gonna fire up a WordPress thing and write. And so
But you were
bring it
enrolled,
back,
right? You were still a teacher at this point.
right. So bring it back to your first question. How did I do it? I wasn't teaching. I was teaching full time, but it wasn't like full time. It was like I probably had, let's say, 7 classes, 7 hours a day, but it might be like 4 hours of classes.
Yeah.
So in the breaks, I would just write. And at first, I lived like 10 minutes away from my school, so I would be like, oh, I've got 2 hours. I'm going to go home and write.
Helps to
And
be
I
an
would
English
map
teacher
stuff.
too.
Yeah, I would map stuff out. I'd map stuff out, I think maybe once a week. Like I just like a to-do list. I'm gonna write, because I was working on 3 or 4 different sites at the time. So I was like, right, I'm gonna write this article, this article, this article, this article today for that site. And I would write the articles, and then I'd like go back to work or something. And then I think my brother got a new iPad, so he gave me his old iPad, and it honestly it kind of changed it gave me such a productivity boost because now I could take my iPad to work, and in my break time, which might only be 20 minutes long, I could like work on an article, and then I get home and upload it to my website. And so I was just writing all the time, and I was listening to podcasts, reading blogs about keyword research, so just like living and breathing it. And slowly, like I said, it took me about 18 months, but slowly I learned how to just get more traffic and monetize it better and do conversion rate optimization and get to $1,000 a month. And then I think so. Here's where it got interesting: was 18 months to get to 1,000. I think 20 months to get to 5,000. So it went like 2 months. I went from
Hmm.
1 to 5, and then it kind of just kept going up from there. And I stagnated a bit around 10K a month.
At what point did you shift
Yeah,
out? So at what point did you say, hey, I'm gonna
somewhere,
hang up the boots
somewhere.
of teaching?
All right, folks, it is time for us to take a quick commercial break from the pod.
Hey, yeah, you.
Tired of running in circles with your business? Exit Studio is where founders like us stop hustling blind and start building equity that counts. Join the Exit Studio today at bootstrapper.ai.
Shortly before $1,000 a month. So I was sort of forced to transition out. Basically, so I was working at a language school in Taiwan. So it wasn't like teaching, like, like the sort of in the sort of full-time education system. It was like a language school. And my boss wanted to retire and she couldn't sell her school. So she was like, I'm just going to shut it down. So a lot of my students were like, well, we don't want to find a new school. Can you just come to our house and teach us? But they did it through my boss, and my boss was like, well, you need to pay him more because you're not paying me anymore. So basically, I was earning something like $500 a month online, which I basically just plowed back into growing my business. Like, oh, now I can buy some software tools, or now I can
Bootstrap away.
yeah, exactly. Like now I can finally afford Thrive themes or something.
Yeah, yeah.
And
Theme Forest.
yeah, like I can buy backlinks, that kind of thing. But I kept just enough private students where that paid for my rent and my food, basically. And I very much bootstrapped my whole life. Like I didn't buy a PlayStation for like 10 years or something. And I didn't, I just had this mindset of like just not really spending any money.
Love it. Yeah, we call it Entrepreneurship. It's a less risky approach to capitalism. Take risk off the table and you leave yourself with the upside.
Yeah, and I remember at one point when I was making $500 a month, I was like, well, at the very worst case, I can probably afford an extra flight home every year to see my family. So like, that's not such a bad outcome.
Good why. Yeah.
And I mean, I wanted way more than that, but I was like, well, if this is the best I get, it's still like 500. I remember telling a friend, they were like, how's it going? And I was like, yeah, I'm making about 500 a month. And they were like, really? Wow. And I was like, okay, that's pretty cool.
Yeah, you change your perspective, change your approach.
Yeah, basically that's how it started. And then, so my school shut down, and I took a few private students, which basically covered my life expenses, and then but it also freed up my time massively. And I think I had a couple of friends who were like, I'd made some like online business friends by this point from communities I was in, and one or two of them were like, you can write for us part-time as well. So I think I had one friend I probably spent 2 or 3 hours a week writing for him, and he paid me, I don't even remember, I think probably 500 a month roughly, and or maybe even more. But that basically, like that, now the business was set up. So I'd wake up, I'd work, I'd go teach my privates, and again, if I was taking the bus to their house, I was writing on my iPad or listening to a podcast or something. And yeah, I just lived and breathed it. I remember at the time my wife, I think we may have been engaged, or I think she was still my girlfriend, but we'd been together a while. And it was like a Saturday afternoon, and we went out somewhere. And she could tell that I just wanted to go home and work. She was like, "Do you want to go home and work?" And I was like, "Yeah." And she was like, "Fine, let's just go back." And she wasn't bothered. Like I think, and when we were on the way, she just said, "Yeah, you're lucky that you found something that you want to do. So like even on a Saturday, you just want to go and do that and not
And get
like
better
go
at it.
to the pub or something." And I was kind of like, "Huh." And now she doesn't mind that I'm recording a
Productive
podcast
addiction.
at midnight. So
I love this. I'm so excited because
yeah.
you are the first guest that we have that has lived the entire journey of quite literally exit one, which we just covered, like exit the day job, make the business the job, all the way through exit 5. And today with Onfolio HoldCo, you're living in like exit 4, operational exit. You're acquiring businesses and having them run with other folks. I want to make sure that we touch on everything and really touch each step in a sense. At what point did you bundle everything together in terms of the digital portfolio? Did you keep it and cash flow it and reinvest it? Did you bundle it and sell it, exit it, and then what was your growth mix? How did you continue to go through this process?
Yeah, so I think around 2016, I realized maybe buying businesses was better. I bought one or two in maybe even as early as 2014, 2015, but 2016, 2017, I started thinking, so this is like 5 years into my journey.
You've been
I
in
started
this now,
thinking,
and you got
like,
cash flow coming in.
Yeah, I started thinking, okay, I want to start buying businesses. And so I would look at places like Empire Flippers and Flipper.
Hmm.
And I think I took a PayPal loan from that one of my businesses qualified for like 45 grand or something and used it to buy a business off Empire Flippers, which was making grand a month. And I grew it to 2 grand a month. And I was like, all right, that's a win. And my business just paid off the PayPal loan in like 5 months. Like, yeah, it's expensive capital, but it's also, I made a positive ROI and I didn't have
Probably
access
not
to any
capital
other
for somebody
capital.
just getting started, but if you if
Well,
you have a
I
little
mean,
bit of something going.
I had to qualify for the loan through the revenues of my business, sure. But for someone that was living in Taiwan but working entirely online with a UK PayPal account and didn't really have any other options. But then in 2018, so we kind of skipped a part, but I built this business called Human Proof Designs where I was doing these done for you websites for people. So I started saying, kind of because I'm a teacher, I guess, but I was like, here's how you can do affiliate marketing too. Here's how you can get started, or you can hire my team and we'll build you like a starter kit basically. And then you can take that off and take my training and go.
Hmm.
And then so that was doing about $1 million revenue a year. And that's why I was able to get the PayPal loan and stuff. But
Gotcha. Yeah, that's a big skip. That's a big step to skip. Yeah.
yeah, I've told the story a lot. Sometimes I forget
Yeah.
people might not have heard it before. But basically, I realized I don't really like this business anymore. I feel like I've kind of grown beyond it and I've grown beyond the audience.
But it was do it yourself. You did it for yourself, and you got the positive reinforcement off of the action, and then it became a do for other people, do for others, do for
Correct.
yourself,
Yeah.
building
Yeah.
the
Yeah.
sites,
Yeah. Yeah.
and then do for others, monetized a little bit better and scaled it
And that's
aggressively,
kind of how
remove some
Onfolio
constraints.
started because I started buying businesses more and I realized I want to do this more. Like this is fun. This feels like and like
Yeah,
exciting stuff.
deals are
And again,
fun. Yeah.
I had no idea what I was doing. Like I'd read other people's blogs. There was someone who I can't even remember his name now. That's a real shame. He put out good content, but
No, it would
I'm
be a
just
good
old
shout
now.
out. Yeah. Pay homage.
But
Yeah.
he partnered up with some investors and he bought a business off Empire Flippers and then he did a public case study and I remember at the time to me it was so weird. It was like, why would someone spend, and I had done it myself, but it was like this slow epiphany for me. I was like, why would someone spend 50 grand on a business, 50 grand to buy a business that was only making 2 grand, which I think was roughly what the multiples were back then. It was like a 25 times monthly. I was like,
Mhm.
it's making 2 grand a month. And at the time I was making, say, I don't know, 6 or 7 grand. So I was like, another 2 grand wouldn't change my life. But not having 50 grand in my bank account, like that would, like, because I probably only
Scary.
had 50 grand in my bank account. So I
Yeah.
was just like, whoa. And then I didn't understand, like, that's like a 40% ROI or a 50% ROI. And so as I learned more about investing and deploying money and stuff, I was like, oh, wait a minute, online business is like really lucrative if you can, like, if you know what you're doing.
Hmm. Build the
So
wedge.
I had people in my audience who were like, I don't want to buy done for you sites. I want to buy like a 50K site of Empire Flippers or a 100K site of Empire Flippers. And can you do a course teaching how to do that, or can you do it as a service? And that was really the idea behind Onfolio. Was like, yeah, I can do that. And so I started Onfolio before I sold Human Proof Designs for two reasons. One was I never like waiting around for stuff, so I just started Onfolio. But I was speaking to a broker, so I sold Human Proof Designs through FE International.
Okay.
I spoke to Thomas, the CEO now. I said, I want to sell Human Proof Designs, but I also want to start Onfolio. And I'm concerned a potential Human Proof Designs buyer will not like me starting Onfolio. Even though they're not the same, they're similar enough that, he might complain. And Thomas basically said, we'll start Onfolio now. And then it exists and it's out there. And any buyer of Human Proof Designs will know they'll have to be comfortable with it because it exists and it's out there. And I was like, oh, yeah, that's a good idea. So I started Onfolio and I don't know, maybe 4 or 5 months later, I had a Human Proof Designs buyer. And I sold that for, I think I got about 5K after fees and commissions and stuff like that. So I
Hmm.
sold it for about 700, and then moved on. Went all in on Onfolio, which at the time was the business model was if someone wants to buy an online business, They can hire my team. And we didn't charge a lot. We charged like a small monthly management fee. I still had, I was like, no one's going to pay more than $1,000 a month for this, are they? If I started it now, I'd probably charge 20 grand a month. And then it was all like profit share. Like if we can grow the business, we'll get a share of the upside.
I didn't know that you
Which
guys did that. I didn't know that's how you
yeah,
started.
it was a very popular business model that I probably didn't execute on perfectly, but we grew very quickly. So this was 2019 now, like basically the start of 2019 we started it. I think I sold Human Proof Designs maybe March, April 2019. Grew kind of like crazy throughout 2019. By the end of 2019, I think we were managing 30 websites for people, ranging from like 50K to 400K in terms of acquisition price. Build a team. So in the beginning, I just used my exit money to pay myself a salary and pay my team's salary. And then once we had enough clients to pay myself, I started taking a salary.
So you exited,
probably,
exited 700K after fees. You reinvested into Onfolio, which was already existing because you strategically placed it before prior to exit.
Yeah.
Started to take on clients, and the client was a subscription base with a service on the backside and a performance fee on top of that. And the service was help acquire and then help run.
Correct, yeah. And I also, where most of that money went was I bought my own websites as well, because I was like, hey, I need to replace my income. And so I probably spent 300 or 400K just buying websites to get my own like income up, and I was able to support my team's salary and stuff. And then as we brought new clients on, it worked out well. So Onfolio kind of had its owned portfolio and then the client portfolio. And yeah, and I did that for like a year, maybe. So around March 2020, which will be a date that many people are familiar with. Actually, it probably started before that, maybe January 2020. I kind of was like, this is cool, but it also kind of sucks because we're growing like crazy. We've got loads of clients, but we're really just a glorified agency. We're not really like an M&A firm. We could just be an SEO agency because we're just doing SEO for our clients and we're doing affiliate marketing for our clients. And we've got 40 sites or 30 sites, and hey, Google did an update. 2 of our clients lost traffic. The others were fine. So that's pretty good, but not if you're those 2 clients. And so I was like, well, there's got to be a way where we can diversify it for people and I can build a dedicated team. And people, I had a couple of clients leave because they were like, I mean, one person asked me for an update and I sent him an update. And then 2 weeks later, he said, I still didn't get an update. I'm going to go with someone else. And I was like, I sent you the update. And it turns out it was in his spam, but he'd already decided to go with someone else. And I was just like, that's kind of BS. Like, I don't want to deal with the drama of individual investors. So I kind of was like, maybe we can become a holding company. And then if investors are all owning like 1/30 of 30 sites instead of 30 individual sites, if 2 sites get taken out, it's not really a big deal. And so that was the thesis. It's not like I invented diversification, but that's kind of how I discovered it. I was like, oh yeah, that's why people do that. And so I then started thinking, what are the different holding company models? And that's where, so now it's like early 2020, COVID's happening. So I just kind of made that transition. And I said to my existing clients, I'm not going to fire you, but I'm not going to take on any new clients. Some of the smaller ones, we did find someone else to run their businesses for them. But we raised some money, and the idea was we're going to try to take this public via direct listing on a smaller exchange, because once we're public, with like only 1 million revenue or something crazy, but like once we're public, we can leverage being a public company a lot more to access more capital and to grow. And then I think,
was that your idea, or did somebody pitch that to you?
Somebody pitched that to me. Yeah, I'm nowhere near clever enough to come up with that myself. And I liked the pitch. It wasn't like, hey, you should do that. Great idea. Let's do it. It was like probably a 3 or 4 month conversation. And I brought on some of my advisors and my high level team members to be like, what do you think? And so I think September 2020, we raised about $1 million. I think it was about 800K to go off and build the holding company and work towards taking it public. And
was that the first time you ever raised? So up until this point, you did it for yourself. You're
Yeah,
in the role. You built on the side. You then scaled it. You then built the done for you to a mill. You then exited. You had reinvested. Did you? Is that the
yeah,
first time
no.
you ever raised capital, or did you bootstrap all the way through?
I had done 3 or maybe 4 group buys before that, where I said to some this was when I was trying to solve the diversification problem. I had said
Almost like
like,
a
why
syndicate
don't
type.
we get what? Yeah, people come together and
Gotcha,
put in like
gotcha.
50K each, and we raised like 300K and went out and bought a business.
So that was like dip the toe of raising to acquire.
Yeah, that's like how I started learning about the 1933 investment company, no, the Securities Act and the 1940 Investment Company Act. Like that was my, instead of learning about keyword research, now I was learning about securities laws. Most of the people in my audience weren't accredited, so I was trying to find a way to raise money from non-accredited people, uh, legally and everything. And so
Like a GP structure, have everybody a part of.
yeah, and so I was considering just having a fund as well. There was definitely some mindset issues back then, like I didn't, or limiting beliefs. Like I was like, I can't raise a fund. Like everyone in my, I can raise 20K. I can't raise 20 million. And funds don't really work if you're just going to raise like 2 million. Like you need probably 10 million minimum.
Mhm.
And I mean, even at 10 million, it's tricky. But yeah, like, and so I went, okay, let's do a holding company and scale that way. And then because the internet was going nuts in 2021 because of the pandemic, and like
Mhm.
everyone was making money, everyone was spending money. We had the opportunity to, rather than do a direct listing, we could IPO on NASDAQ. And we were kind of like, we're not ready. We don't even have a CFO. We don't have any board members. But we're not going to look a gift horse in the face. So we were like, okay, let's let's just go public on NASDAQ instead. Why not? What else are we going to do on a lazy summer day? So that was the transition where we went, okay, let's do it.
This was still at a million in revenue. So what's the
Yeah,
logistics
we went
behind
public
going
with
public on NASDAQ?
1.2. Well, not filing your documents the day before Russia invades Ukraine would help, but we didn't do that. So
Didn't check that.
yeah, we were like, whatever. No, basically, there's a few different ways of going public on Nasdaq, and I don't actually know all of them. What people assume is you have to be big and you have a lot of revenue and so on, and that is one of the ways. Sure,
Yeah, I think I mean,
Nasdaq,
perception
yeah,
wise, yeah, that's what.
Nasdaq, multiple capital markets, multiple tiers. I actually don't know how many, but we're on Nasdaq Capital Market rather than like, Nasdaq. It's still Nasdaq. It's still like has all the prestige and all of the due diligence required and everything. Like it's not yeah, it's still Nasdaq, but the requirements to qualify are different. And so essentially for us, we just needed to raise about 13 million at an IPO, and we would qualify. And they've since slightly raised the minimum to, I think, 15 million. And you can't use existing shareholder equity. So the reason we only needed 13 was because we already had some shareholders from we did one more raise in between where we raised 2 million, but because we had those shareholders, we could use their equity to qualify. Like you basically have to have a minimum stockholder equity to qualify. So the number we needed to raise in IPO was 13. Yeah, so that was why we qualified basically, and then the idea is, yeah, you use that 13 million, you deploy it, you buy businesses, and now you're not 1 million, 12 million, which we are today. Yeah, and so we've been public since August 2020. So it's been about just coming up for 3 years actually. I think the 25th or the 26th, 2022, we went public, and we're recording this on the 14th of August 2025. Happy 3-year anniversary, I guess.
Yeah, right. Maybe, yeah, celebration. How has your life changed since that moment? How has your life changed as an individual, and how has the way in which you've done business changed since that moment?
I own a suit now, so I don't wear it much, but yeah, I have a suit. I There was a friend who I spoke to when I very first started. I pitched him on that original 8K raise, and he passed, although he invested later in a different round. But he said, you're not an idiot for doing this. Like anyone who says that they're an idiot. Like, you're going to learn so much about business. You're going to learn so much about like how the world works beyond just like the bootstrapping world that we live in. And it made sense, but I also couldn't really imagine what that was like. It's like trying to imagine what being 25 is like when you're 5. Like, you're like, well, I know, okay, yeah, but I have no idea, like, really. And so the
Lived
answer is, yeah, he was
experience.
right. He was right. Like, I've just learned so much. It's like drinking from a fire hose. I learned about, I learned about investor relations. I learned about the SEC. I learned about capital markets. I learned about investors. I learned about debt. I learned about equity. I learned about, and I'm still learning. Like, I definitely, let's do this again in 10 years, and I'll
I
tell you
would
to
love
ignore
to.
everything I said on this podcast. Um,
I would love
I've
to.
learned about growing business. About, because I think the one limiting factor and with bootstrapping is you can grow businesses a lot better if you have capital. And bootstrap, there's always this like, should you bootstrap or should you raise VC? And I don't think you should. I don't necessarily say, oh yeah, you should raise VC, but and not every business is suited, not every founder is suited. Like, but I always see bootstrappers having a very negative opinion of VCs, and it gets clicks on LinkedIn and stuff as well. Like, you'll say, like, anyone who takes VC money is bad, or VCs are bad, and like bootstrapping is way better. And I actually think they're just different paths. And I think like the bootstrap mindset is try to grow through really through brute force, like try, just your own willpower and being very, very frugal, and it can work. Whereas VC mindset is like, how much money can we throw at this thing to help it grow? And one thing I've really not scratched the surface on since going public, but it's like I want to learn more, is like, yeah, if I've got this business that maybe it's making like K revenue a month and
Mm-hmm.
it throws off K profit a month,
Mm-hmm.
how can I deploy capital on it to help it grow rather than just like bootstrap it?
Mm-hmm.
And so I've learned a lot more about that, and still learning. And I've learned about the joys of weekends when like the stock market's closed and you don't have to worry about like, people messaging you saying, hey, you should do a press release, you haven't done one for a week. And then just so many things. And so I
I
think,
dig it.
how has my life
But that's
changed? I
important,
think
and that's
just,
something
I
for
don't
the
know.
audience to listen to, because like we try to promote that a ton. Bootstrapper capital, folks hear bootstrapper capital and they're like, wait, it doesn't make sense. Are you bootstrapping? Is it capital? What's the story there? And that's a big thing that we believe. It's a concept of taking risk off the table. Like, we want to promote a less risky approach. After observing folks doing this for close to 20 years, I've seen a lot of folks make bad decisions, and those bad decisions took them back. And it's kind of like pay homage to Warren Buffett in a sense. Number one rule, don't lose money, right? So it's like, how do you take a less risky approach in a sense? And one of the things I've observed in market is VCs who aren't necessarily, folks think that because they have a pen and a checkbook, for some reason, it makes them the oracle and they know everything, and they, right?
Yeah, I think
And they'll
they
write
tend
a
to
check for
reinforce
you.
that
And if
as
you're
well.
a young entrepreneur and you haven't done it, or you haven't experienced it, you may be getting that check and you're like, wow, this person just validated me with, they were willing to give me $500,000 or $250,000. This must be good, because to me, that's all the money in the world. And I just got validation. So now I'm going to go commit 2 years, 3 years, maybe more of my life. And what we see, and I mean, I'm sure you see it in the acquisition space, is all these zombie startups. And folks just commit years and years and years into something that they probably shouldn't have if they just took more of a bootstrapping approach from the beginning. Like, we promote SME, sell it, make it, exit it. Like, if there was just more of like that type of approach from the onset, and then you figure it out, and then you're at the 200K and you got the 30K, and now it's like, how do we actually amplify this? Right? Now you're investing into the right places and putting the capital to work. Meanwhile, that person that wrote the 250, are they thinking about you? What are they doing? What is their day to day? Well, and time is probably our most valuable asset. So a big thing that I want to just do with the work that I'm doing now is try to get folks to appreciate their time as much as possible, believe in themselves as much as possible, and in the process, try to take as much risk off the table to increase the likelihood of their success much as possible. But not like, we're in no way, shape, or form saying don't get capital, because capital makes the world work for sure. It greases the wheels.
Especially once you've already validated it as well. They say more businesses go bankrupt because of indigestion than because of starvation. I think that's a Peter Thiel quote, or someone great like him. Like I've seen it. It's true. Like when you have a ton of capital, you do spend it inefficiently because you don't respect the money. Like, oh, let's go throw a party or whatever. But you just it just gets wasted. Whereas when you bootstrap, like you can't really waste any money.
You're almost forcing yourself to make good, timely decisions. You're putting these constraints, like, and the constraints is like capital resources, time barriers, hopefully. And if you force yourself to live within that, you're kind of making good, timely decisions. And you also, sometimes you got to fold, you got to walk away if that's what it is. It just is what it is. Make simple bets.
Right. But when you figure it out, then using capital makes it even better. Like there are
For
definitely people
sure.
out there I've spoken to who maybe they get X ROAS on their ad spend. And I'm like, how much do you spend a month? And they're like, $5,000, and I make 20 grand off it. And I'm like, why don't you spend 20 grand? Why don't you spend 100 grand? And they're just, you obviously
Capital
can't go from
constrained.
5 to 100, but capital strain is one of it, but also mindset is one of it. And it's like, well, I'm not comfortable spending that much. And I'm like, you should be spending, like, obviously the ROAS is going to go down as you spend more, unless you're running ads inefficiently. But it's not the point. It's like, yeah, you've got enough validation from the market. You've identified opportunities to deploy capital. Now it's okay to go out and get some, rather than like, I've got an idea and I want to live in San Francisco, and then you get
it's like, to me, it's a couple of things. One, it's seeking validation in the right place, and the right place being the customer, as opposed to somebody with a checkbook validating you, right? So it's like seek validate. It's like revenue for vanity, profit for sanity type of concept. So like seeking validation in the right places versus the wrong places, I think is pretty important. And then also taking the right type of capital. We're talking about VC right now, which is like 16% of the market or something like that. 16% ever raise money, 4% are VC. When you're looking at the broad scope of SMBs or businesses, America, the vast majority aren't. And then the folks that aren't raising VC, they're getting access to different types of capital. And access to capital is a really significant issue. And access, just like most things, typically create compromised situations. And when somebody's compromised, they tend to have a higher likelihood of making a bad decision. So I also feel like it's not just the seeking validation, the right places. Some folks feel like, oh, I got to go get capital, get that validation, and the capital they get is not good capital. People don't talk about preferences that people put on. So you could get wiped out with a preference. Then you talk about debt, like the credit mark's a whole different world. Debt is a whole different world, which is where most folks go. There's like a lot of risk. And it's just, if you could figure it out, bootstrap something profitably to get going, and then put some capital behind it going, there's probably a good chance. And you're going to learn, and the whole process, like you said earlier, it's all a learning experience, and it's all one big journey for sure. If you were to do it again, would you have done what you did earlier? Because you went from 2012, 2013 to 2000. You're talking like over half a decade, right? Close to a decade. And then you started to do the small like syndicate rounds, acquisitions, and then you did Onfolio, right?
Would have done it earlier if I had the knowledge earlier. Yeah, I think basically, like kind of like I said right at the beginning of the podcast, it's like I just kind of, it's like the kind of, it's like talking about adjacency, right? Like if you're on a chessboard or a checkerboard or some type where you can't really move, you can't really jump. And I'm not talking about pieces, like I know like a rook can jump, but really you can move to an adjacent square. You can't like move to the other side of the board.
Bubble jump.
And so how I got from where I started to where I am now was very much about taking adjacent squares. And maybe other people took a different square. Most people took a different square. But I was like, oh, what happens if I take this square? Or that sounds interesting. I want to go that way. And so it's not like I don't know if I could have done it earlier. Like I was saying, like if anything, I probably should have gone public later, or at least should have maybe raised more money, or should have had more revenue when we went public. But at the same time, 10 years from now, I'm going to look at where I am and I'm going to be able to draw a straight line from there to the decision to go public when I did. So it's like, well, there's things I would have done differently because you drive business. Business is driven from the windshield when, it'd be much easier if you could drive it from the rearview mirror. But
Right. Yeah.
yeah, I don't know. I would love to have done it earlier when I was younger and be that much further along in my journey now. But I don't think I could have learned it any earlier. So
If you go
that's
back
my
and
thinking.
if you give advice to your younger self or maybe younger folks that are listening and you have the optionality, would you go private HoldCo? Would you go public HoldCo? Would you go fund structure? Would you go something else?
If I gave advice to somebody else,
Yeah.
there's kind of two answers there. If I gave it to somebody else, I would say figure out what's important to you. Being public is, in some ways, being public is great, way better than being private because of the visibility, the access. You learn way more.
Credibility.
But in other ways, being public kind of sucks because the scrutiny and the limitations that you sometimes have because of all the various rules. So some people will love it, some people will hate it. So I can't give answers there. There's pros and cons. People ask me like, don't you think it's better to be private? And I'm like, I don't know. I don't have any counterfactual. I didn't split test it. So, but to myself, I would probably just say, yeah, do it, but do it better. Or maybe we could have raised a little bit more money when we were private and had a little bit more revenue and profitability before we went public. But
Yeah, which is all, I mean, that's all hindsight type of stuff.
yeah,
You
I
know,
mean,
and
we've
it's all,
10x'd
you
our
can't.
revenue since we went public, so it's not like it hasn't worked out. But yeah, like there's definitely ways it could have been better.
Yeah, I love everything about it. And you've done a couple of different things. So you've raised, you've done preferred. What is your preferred option in terms of capitalizing, let's say, an acquisition these days?
Whatever is easiest to raise.
Yeah, is that
Honestly, it's exhausting. I mean, preferred shares have pros and cons. Like our preferred share is just straight preferred share, so it's not convertible into a common share.
what's the
Just a
mechanism? It's 12%.
12% paid quarterly, so 3% per quarter. We never have to pay back the principal unless we want to like stop paying the 12%. But like somebody could sell the preferred share to somebody else if they want to move on. So in some ways it's great because it's basically interest only, and the interest is high but it's also low compared to some of the other capital out there. Revenue-based finance can be good sometimes because if you've got a business that fluctuates, revenue-based finance can actually give you more capital than you might be able to get elsewhere. I think really it's about the structure, like where we've come alive the most or been the most innovative, perhaps. It's not like I don't know if we necessarily invented something new, so maybe innovative isn't the right word, but creative was the last two acquisitions we did. We basically put no money into the deal ourselves except like legal fees and due diligence stuff. So the cleanest one was one we bought a business for $6K. It was doing about 200K profit. So it's like a 3x multiple. We raised money from some co-investors who put in 200K, and then we gave the seller of the business 200K worth of preferred shares, and then a 200K note, which is like I think 9% interest, and it's interest only for 2 years, and then in month 24 pay off the remaining note, or the entire note because it's interest only. So essentially, and then the co-investors who put in the first 200K, they got 33% of the business because they put in 33% of the money, or technically they put in 100% of the money, but they put in 33% of the value. And so for them, cool, they just bought a business, they're minority owners, they don't have to do anything, they've got 33% of the equity. It's a 3x multiple, so they should get 25% returns, more if the business grows. So it's good for them. And then for us, it's good because we got 66% of the business without having to put any cash in. So it's kind of a win-win. Now,
go to outside
raising
capital.
money for that is it's like, do you do it per deal? Do you try and do a fund? So it's just trying to build out the capital pile for that structure was hard. And then you want to find a business to buy. And then you're like, well, I don't know how much I'm going to be able to raise, because we typically were raising from like retail investors, because if we wanted to raise more institutional money, like $10 million to go out and do that, they typically structure it in a way where they're like, well, we want to buy a business that's it's 30 million valuation and we'll get paid like 3 times our capital back, and then you'd start to get some profit share. And I was like, that's not worth it for us. Like it doesn't make sense for us. But that's kind of the independent sponsor model, which actually I think it does work for a lot of people. And if I was starting again today, I'd probably explore the independent sponsor model. But basically it meant like it was just like a full-time job raising the capital, but also trying to find the businesses to acquire with the capital, trying to find business owners that were okay to take this structure, and because not all of them are, and also running my business and being a public company CEO. Part of the challenge we've had since going public is we've never been sure exactly what the easiest route for capital is. Like, there's a ton of debt that's super toxic. We could get that all day. We could dilute shareholders and raise equity all day. But it's like trying to find the right capital in a timeline that works is tricky. And it's gotten easier as we've gone from 1 million and losing a ton of money to 12 million revenue and sort of basically break even. But we went public in the worst time in the last decade to go public, basically. Like, we went public the day before NASDAQ's biggest drop for 10 years. That was our first day of trading. The capital markets are just tough right now, with everything that's going on with the world, and so
do you find it a competitive advantage to be targeting the deal size that you're targeting, right? So you're targeting, micro, really what we would consider micro equity deals for acquisition.
Sure.
And most of the institutional money wants to go mid-market, but you're building, Onfolio is mid-market. And you have this potential competitive advantage that you're building towards competing in a space where not a lot of people are competing, but you're still kind of waving the big stick. Is that kind of the thesis? Is that the...
Yeah, that wasn't exactly why we target businesses that size. It was more like that's what we were familiar with. But there's definitely an advantage being a public company in this space. Yeah, definitely.
Would you go upstream?
Yeah, I think you just have to do it over time. Like, we're not going to go out and buy one business that's going to represent like 85% of our revenue or our enterprise value. We'll like stair step it. But as you go buy bigger businesses, the multiples typically increase, the competition increases. On the one hand, there's more leverage available, like more debt capital. So there's pros and cons, but it's like, are we going to pay 7x for a business? I don't know. But yeah, it's kind of like a diversification thing. We'll do it over time, and we've already gone upstream a bit. Like, we've increased our, like, I wouldn't buy a business that's only making like 500K a year now.
What's your sweet spot target?
Well, it does kind of depend, because I was about to say I would buy one that's doing less if it was like a strategic, like if we've got some online courses, I'd buy an online course if it was doing K a month and it's validated because we know how to grow it and everything.
And you got the new model where you'll also partner with folks to do that too on the profit share.
Yeah, exactly. Because we realized a lot of courses don't work without the course creator. So we just said, okay, we'll just partner with you and get 50% of the upside instead of 100%. But like more upside. So yeah, I'd say probably $1 million, let's say 1 to 5 million revenue is good, or like $1 million profit. And it is tricky because there aren't that many businesses for sale at that size, because if they've got to that size, they're probably on a path to being at a bigger size as well.
Right. Yeah. So that it is actually fairly, and that's what we found as well. It's actually fairly competitive to be able to find the right type of deal in that market, even though, you're kind of taking out a lot of institutional professional buyers from the competition pool. It's really more supply demand is the problem. When you're talking about operations, like, you're running this HoldCo, folks listening, should they be thinking like Berkshire? And that's the model. How do you actually run? So how do you run a company that has 12 other companies?
Trial and error, basically. But Berkshire was a lot more, they've evolved over the years as well. Like, earlier on in his career, Warren Buffett was a lot more involved with the companies. But basically, we started out quite decentralized. And if you look around at the best holdcos, generally speaking, Constellation Software is regarded as like the guiding star. Most of them are decentralized, and they've pushed a lot of the M&A decisions down, or maybe not the final decision, but the M&A like origination down to the subsidiary level. They're very programmatic acquirers, and they just for all intents and purposes, like they've got it down to perfection. But we found actually a hybrid approach works better for us. So we typically, and maybe it's the bootstrap mindset, maybe because we underfund some of our businesses, we find we typically get better results if it's like we help the sort of central team helps to run the businesses and design and define their strategy in collaboration with the teams, and then the teams themselves kind of execute. And some of that's just like, hey, we're a small team, we need to do it that way. But just the performance tends to work better when you do that. So we started out very centralized because we just were running a bunch of like SEO properties. Then we went, that doesn't work, let's go decentralized. And now we've gone, oh, that works better, but let's try, how can we improve it?
Quasi.
And we've got this kind of hybrid approach. It's like centralized.
And for the audience, centralized is like all of the central operations being central at the HoldCo level for each subsidiary, and decentralized being everything is individually within each subsidiary. And what you're talking about is a hybrid of like maximizing the value of the best of both worlds while still giving the freedom for the decentralized to just optimize appropriately.
Yeah, I mean, there's the best description I've seen is like, there's 3 types of HoldCos, and I'm sure there's more, but there's a roll-up, which is really, like maybe you're rolling up dental practices or something. Typically, a roll-up is like, you're rolling up one type of business. And then there's thematic, which is like we're acquiring digital businesses, or we're acquiring vertical market software, which is what Constellation does, or we're acquiring SaaS or whatever. And then there's a hodgepodge, which is like Berkshire Hathaway, like they've got everything. Or Tiny, if you're familiar with Andrew Wilkinson and Tiny, they're a hodgepodge. Like they've got restaurants, they've got some stuff is in his fund, some stuff is in the company, but they've got restaurants, they've got e-commerce businesses, they've got digital businesses. So those types are called like a hodgepodge. And then within those 3 types of holding company, you've got centralized and decentralized. And different ones work better. Like most roll-ups, for example, are centralized, but you can get decentralized roll-ups. And then thematic businesses typically can be both. And a hodgepodge usually has to be decentralized because everything's so different. You can't centralize that kind of business. And thematic, most of the ones that are successful are decentralized, but some of them are centralized. Like I'm trying to think of some centralized ones. But yeah, basically, again, for the benefit of the listeners, centralized might be like you have one marketing team that does all the marketing for all the businesses, or you have one SEO team, or you have one
team,
strategy team, or
which in concept makes it seems like maybe it makes sense, but then you start to dilute.
I mean, I think even decentralized holding companies have centralized HR teams. Like one HR team's enough. You don't need to surround yourselves with more than necessary. Yeah, I mean, and for us, we've kind of developed on what we call, whatever's necessary. Some businesses are still pretty decentralized. We don't really talk to them much, or we let them get on with it. And other businesses, we're effectively operating them ourselves, like at the central level. So
what is your cadence of accountability? So how are you looking at each individual subsidiary? Is it a weekly retrospective type of basis, or?
It depends what the accountability is. Like if it's like their books and their performance and stuff, it's kind of ongoing. But yeah, like we're not checking it every minute or anything. If it's check-ins with management, again, like people earn the right to have less check-ins or fewer check-ins. And so it might be once a week for some people, it might be once a month for others, that kind of thing.
Do you empower to the P&L? Is it each operator P&L ownership? And
it depends. So when we went fully decentralized, yeah, they had P&L ownership, and some businesses we're kind of, I wouldn't say we're owning their P&L, but some, yeah, they're very decentralized. We don't do anything with their P&L. We're like, tell us what your cash flow is looking like. Are you going to need more capital? Can we take some? And others, it's like we're watching it closely. It depends on the sophistication level of the team running it, and just kind of the arrangement. So it's really a case of, I think the problem we made when we went all in on being decentralized was it's almost like decentralized. What you're trying to do when you decentralize something is equip the businesses for the best way that you can help them grow. And for some businesses, that's actually not decentralizing them. The answer is just like, maybe you need to hold their hand. you could argue if you're holding the hand of your business management, you've probably got the wrong people in place. But it's also like at the end of the day, when you're running a portfolio, you're going to have more insight and more. You're just probably going to end up better at business than each of the individual businesses because you just see more and you learn more and you can
Make faster decisions better.
yeah, and you can distill the learnings better. And so some businesses we're just more involved because we don't want to be decentralized to a fault. Like maybe a year ago or 2 years ago, a CEO would be like, "Hey, what do you think I should do here?" And we'd be like, "Hey, we hired you so you could tell us what to do." And it's like that's kind of well, if you know the answer, like don't it's like there's a reason driving instructors
We're all
have
in the
their own
same
pedals
boat.
as well, right? They can use the brake pedal as well. So we just yeah, that's just how we approach it now, and that'll change. Like maybe a year from
Empower and
now, it'll be
elevate
different.
in the right way. So outside of capital, navigating capital, what do you think is the hardest part of the job?
Probably finding the right people
Right?
is hard. I would say investor relations can be difficult as well because everybody understands a holding company, but people actually don't really understand a holding company.
What do you
Everyone's
mean
like,
by
"Yeah, I know
that?
what a holding company is," but you show them like your P&L or uh, knowing what a holding company is one thing, but understanding a holding company is something really only holding company operators can do.
How are you getting your talent? How do you find the right level operator? I feel like that's a market problem that I haven't seen really addressed well. Like I feel like there should be like a
Uh,
university for operators.
I go on podcasts and I talk about the business, and people reach out to me.
Is that the and that's the call to action for this episode? Flood the
Maybe, but
inbox.
no, inbound has produced some of the best people yet. I would say that's another benefit of being a public company. I mean, it's not like private companies can't recruit people, but like being a public company definitely gets you in front of people and gets them wanting to work with you.
Do you adopt a set cadence? Are you running like EOS or something like that? Or do you have your own kind of business
Now,
system
my
that you
theory
built
about
out?
EOS is everyone's either just started it or just giving up. But typically we try to run DX. I think is what we're currently using. We rotate, but if we acquire a company and it comes with a team and their system works for them, then they can use that system. But otherwise, one thing we find is most companies want structure. They want to be like, yeah, what system should I use, or how often do you want to meet? Like people of course everybody wants autonomy, but also people want structure.
I
And
kind of just
so
want to know like the simple thing, like what do I focus on versus everything else?
yeah, so we typically are like, you can use whatever system you want, but here's the one we use. You should probably use our one. But like if you insist that this one's working for you, then cool. Maybe we'll learn something and we can help the rest of the portfolio.
Yeah, I'd love to introduce you to like our EMS structure. Where do you think like the future of things are going? So world is changing as we speak. I know we're coming up. I'm definitely being overly selfish with the time. Potato. This has been an amazing episode. I think like literally almost like a masterclass, and probably a lot of people would gate this behind something because I think there's a lot of information that's been dropped here. Practical learned experience, which is the hardest experience to get, probably the most expensive time learned experience. But what I was hoping we could wrap up with is like almost like a futurist perspective of the way the world is changing. You know, we just covered almost close to 10 years plus of a certain way of digital business. And now everything is changing. I kind of want to get your take on that because you're building things in it, and it seems like a major market opportunity. Personally, very interested in it. And then from there, because yeah, it's like what midnight for you at this point, past.
Yeah, coming up on 1 a.m.
My gosh, yes. So if you're down to go into the new age, new era, definitely we can. Otherwise, I could cut all this out and we could kind of wrap it up. Up to you if you want to do a
I don't mind.
two-parter.
I don't mind. I think unfortunately I don't really know what the answer is. I develop a thesis and then something changes like a week later.
Right?
I'm definitely not one of those people that want AI to slow down and be controlled and everything. But I'm also like, can everyone just stop building stuff? I want to play with the toys I've got. There's that meme of like it's like the Captain America and the one guy who, again, like getting late, forgot his name, but he's like jogging at normal speed, and then Captain America's like running rings around him,
Yeah.
and it's like me getting used to 2020, and then 2021 is zooming past you. And I feel like that applies to AI. It's like I'm just digesting GPT-4, and then like GPT-5 is like, see ya. And
Week
then
over week change. Yeah.
yeah, and it's just like it's exhausting. Like I was like really bullish on building AI apps, and then I was like, oh, what's the point? As soon as I build one, like the technology,
Do you think
it's
that AI
obsolete
is going to
already,
wipe
you know?
out digital businesses?
No, it'll just change them.
What do you see
It's like
that
people
change
like you
being?
bought agent. Well, people want other people to do stuff for them. So like for agencies, for example, Sam Altman's like, yeah, agencies aren't going to exist anymore because he's really good at selling his own stuff. If there's the work that agencies do will change, but agencies will still exist because there'll always be someone that's like, can you do that for me, or can you teach me how to do that? And so um, people were predicting when ChatGPT 3 or 3.5, or like when ChatGPT first came out, that by now we'd all be out of a job. And it's like, so far, I'm yet to see people that have sort of successfully replaced all of their team with AI.
Yeah.
There's probably some, but I wouldn't say,
Are you seeing any productized
like,
services that are doing it successfully and profitably?
yeah, but they still need people.
What type of space?
I mean, AI means that maybe now instead of a team of 100, you might need a team of like 95. I think everyone's like, no, you need a team of 1. And it might get there. Like in the marketing space, people are using AI to be more efficient. It speeds up some of the things that might take a long time. So for me, for example, when I write an article now, I can't just go to ChatGPT and say, hey, write me an article about this, because it would be awful. But what I can do, because I've spent time talking to it and it knows my voice and it knows my thinking, I can say to it, I want to write an article about this, and these are some of the key points. And I can't wrap my head around the structure, or I don't know how to articulate this thing, like this problem that I'm trying to describe. And ChatGPT will be like, how about you do it this way? And I'm like, and sometimes I'm like, yeah, that's perfect. And sometimes I'm like, that's not quite what I meant. But there's a back and forth. And then you can either then take that and go off and write the article yourself, and it saved you hours and improved the quality. Or better yet, sometimes ChatGPT is like, do you want me to write that article for you? And I've done that, and people have replied to my email saying this is great. And sometimes ChatGPT one-shot the article. Sometimes I'm like, that wasn't quite what I wanted to say. I'm going to tweak it. But it used to take me 1 to 2 weeks to write an article, and now it might take me an hour.
Do you
And
think
it's
that's a
not
business
just
for somebody who's trying to bootstrap something profitable, sell a service?
Yeah, I mean, I've seen people launch businesses like that. Yeah, Alex Lieberman has got one similar.
Distro?
I think it's called Distro. Yeah,
Yeah.
I don't
Or
know if it's
Storyyard?
quite like that, but I think it'll give people the same productivity gains. If maybe it doesn't work exactly that way, I'm not sure.
Yeah, great person to follow too. Great
Uh,
content, amazing content.
yeah, Alex is a really smart guy. What else was I going to say? Yeah, so
Do you think we'll have
the
UIs
other
anymore?
thing,
Do you think we're going to replace SaaS and it's just going to be a UI less experience, user experience, voice?
I actually don't have any opinion on that. I don't care. Honestly, I'm just like, whatever. If I was like a UX person or like a designer, yeah, like that's a good question to ask. But I'm like, whatever. Like, just give me a tool that I can use and I'll use it. So I don't know. Maybe
What about
not.
for traffic? Acquiring eyeballs and users, customers, clicks.
Yeah, I mean, I think social media is still going to be important. I think ChatGPT is going to become increasingly important, which is why we launched a GEO agency. And paid traffic is probably going to become more important as well.
So
Well,
paid
it's
will
already
become more
important, but
expensive.
yeah, probably. Yeah, it depends.
And GEO becomes
It
the
depends.
arbitrage
In
opportunity.
theory, I say paid becomes more critical. I don't know if it will become more expensive. It probably will. But if Zuckerberg gets his way and Meta, like, what he wants to do is you just say, hey, this is my product, this is my client or my ideal customer, and Facebook just goes off and finds them for you. If that works as well as he says it should or he wants it to, I would have thought that makes ads cheaper. But I think it will take a long time to get there, and I'm skeptical. But like in theory,
You don't think
I think
people would
it
just
would make
pump more
ads cheaper.
budget then, and supply demand, it just increases price? Because there's only so many people that buy with so much
Yeah,
disposable
maybe.
income to spend.
Yeah, possibly. Yeah. I mean, I haven't thought about it more than a couple of minutes, but that's a pretty good counterpoint. So let's
What do you
go
do
with
with
that.
GEO? Because it feels like that's potentially the opportunity right now. But that's like, yeah, everything's changing so fast. I mean,
I don't think GEO is as important for traffic as it is for conversion. I think
it's almost like a
GEO definitely is an
referral, like a
opportunity.
trusted authority in a sense. Is that's what you're seeing?
Exactly. It's. I mean, don't get me wrong. Like it's a referral engine as well. Like it's a traffic engine. Like we receive traffic from GEO, and
But it's more like word of mouth.
I think it's like sentiment control as well. I think it's like making sure someone articulated it as like SEO is about getting traffic and GEO is about being part of the conversation. And so I think I think yeah, you will get traffic, but it might also be more like people are evaluating you or people are like doing due diligence on your business or something like that. I think GEO becomes crucial there.
How do you influence it?
You just gaslight it until it believes you. No, there's influencing it is one thing, but it's more about like helping it understand and then helping it. So okay, let's back up. If you really want to influence it, often you just reverse engineer what it's already doing. So if you say like, hey, what's the best company for? I mean, the first thing I did was I got our GEO agency, Pace Generative,
Mm-hmm.
ranking for what's the best GEO agency. And I just was like, well, what sources is it using? Okay, I'm just going to go and get Pace mentioned there. So that was quite easy. But also, um, there's like things you can do on your own webpage to help influence what it says about you or who it recommends you for. So, for example, one person I kind of persuaded to write about us said that because we're a public company, we're the best GEO agency if you are in like a like a regulated niche like casino or something, which isn't true, but that's just what they put. And so for a while, Perplexity and Gemini and ChatGPT were all saying we're the best GEO agency for restricted industries. And I was like, well, that's interesting. Maybe we should start doing GEO for restricted industries. And so really that's just because that's what somebody said. And so you can influence that by getting that out there on the internet on third-party places, but also you could put that somewhere on your website. And so there's just like really simple
Like
things like
social
that.
engineering,
To some extent,
agentic engineering.
yeah. And like people might say, how is that different from SEO? And it's like, well, how's pickleball different from tennis? Like, yeah, they're similar, but they're different as well.
It's like almost, are you seeing this almost like 2012 again, 2013, like a new age of moment time for growth hacking?
Sometimes I feel like it's like 2006, it's that early, but other times, yeah. I'd say 2012, yeah.
Yeah.
I wasn't there for 2006, so like, yeah, I'm just like what I heard about it from the old timers, yeah.
Right, which is wild, yeah. It's so crazy. This has been an amazing episode. It is 1:00 in the morning for you, and I want to wrap it up with the ability to anybody who's listening at this point is like literally the Glengarry of Glengarry audience members. If we were to send them to the right place, like what would you like them to check out, CTA, know, do?
I don't know. It depends what you want. If you want to reach out, you can go to onfolio.com. There's a contact form, or you can find me on LinkedIn and message me there. I'm less active on Twitter than I used to be because I just don't get as much out of it as I used to. I think those are probably the two best places if you want to reach out or if you want to follow me as well. Yeah.
And we will link to that in the show notes for sure. Thank you for the time today. This has been an amazing episode. I really do hope that folks listen to this because there's just so many things of learned, lived experience to be able to pull out of it. Truly the definition of the investpreneur's journey from exit 1 through exit 5. And then back again to exit 4 and everything in between with Onfolio. Amazing. Thank you again. Dom Wells. What do you prefer? What do you go by?
I prefer Dom. I'll use Dominic if it's like, if I'm speaking to a banker or something. But yeah.
Dom Wells. Thank you. Onfolio. Amazing episode.
Yeah, loved it. Thanks for having me.